All right, today is June 14. What about the markets? What about the markets going forward? Well, first of all, let me tell you that we haven't seen all of the losses yet. The real estate market has a lot more to fall. And the losses in the big banks and the big institutions is going to be massive. We've only seen a fraction of that. So there's going to be renewed panic. There's going to be renewed efforts by the Fed to bail out the banks and the financial institutions. And there's a lot of bad news to come. So this bounce that we've seen on Wall Street and in the markets lately is false. It's not real. It will revert, and it will revert downwards. And I say the Nasdaq is going below 2,000 and the Dow is going below 10,000 before this whole thing is over. We have to remember that this has been the biggest boom ever in history, and it's now just fading out. We're in the final phases of the bouncing up and down in this boom, and it will have to be corrected, and that will hurt. A lot of capital is going to go away, but that capital was never real anyway. So my advice is still to sell. Get out of this market and stay in cash, because sooner or later there's going to be a fire sale. But the problem is when to go in again, because when the fire sale really comes and it really gets cheap when you should buy, that's when everyone is going to be so afraid, even you and I, that we might not even dare to go in because it's going to look really bad. And things aren't that bad yet, Things are still pretty good. That's why I say that this financial crisis has a lot more way down to go, because things are still pretty good. I mean, people are still fairly optimistic. A lot of people still have their jobs, and it's nowhere like the 30s. But this crisis, this financial crisis, is the worst since the 30s, since the Great Depression. Now, I don't think it's going to be as bad as the Great Depression, but it's going to be bad, really bad. So it's not just a little bounce that we're sort of halfway through already. No, we have a lot further down to go. But there are certain things that are, the Fed is working to delay it as much as possible. They will try to delay it till at least after the U.S. election. And the Chinese are delaying stuff on their side till after the Olympics. So, when we've had the Olympics, when we've had the election in the U.S. in November, that's when these people don't have the same kind of incentives to delay it. So this winter, that's when we might see the real crash. Maybe in January, when the next reporting cycle starts, when the huge losses have to be in the books. So get out and stay out. And then people ask me, should we buy gold then, or silver, or commodities? Well, commodities are in a bubble, because you have to realize that in this money policy, in this fiat money regime that the Fed has organized, there are always some sectors being pumped up with money and some are being deflated with less money. And the new money that's coming in now has been pumped into commodities and oil market and all that. It's been inflated, and it's the new bubble. So don't go heavily into commodities. What I do recommend, however, is to diversify slightly into commodities. You want to own some gold and some silver, and maybe even other commodities, especially if you know them. But don't speculate into something wheat or rice or oil or whatever that you don't really know much about. Keep out of that. Keep mainly in cash. I'm talking 60, 70, 80% in cash. Then diversify into some other things, commodities or whatever. And the cash also should be diversified into different kinds of currency. And you might want to have some money market funds and bonds, even foreign bonds, U.S. bonds. But stay in short-term cash and wait for the fire sale, and prepare yourself, not at least psychologically, to be able to go in and buy when the fire sale has really not just started, but raged for a few months. You want to see the fire sale go on for maybe a quarter or so before you go in. And you want to keep in contact with your bank, so they will lend you money when the fire sale starts. You might want to leverage yourself on your way up. This is your big chance. I mean, if you can hit bottom in this crisis and then ride the next wave, because there are going to be new waves, and the fiat money system, the Fed is going to print more money eventually, and there's going to be a new inflationary injected boom. And that's the boom you want to ride, and that's the opportunity of a lifetime for us living right now. To stay in cash now, go in at the bottom and ride the next wave. And the next wave will go on for 5 or 10 or 15 or 20 years or whatever, we don't know. But the next wave, you want to diversify on your way up, to set money out on the side and safeguard money for your retirement. So that's my advice about the market. We haven't seen nothing yet, and the commodities are in a bubble. So what you might want to think about is just think long-term and maybe build a long-term business on the side. Stay in cash and start building your long-term business, or just keep your job and put money out on the side, save money. Don't do anything drastic, and don't be tempted to go in with your money too early, because if you go in too early and the market keeps falling, you just don't know when you're going to get out, and maybe you'll just freak out and sell at the bottom. That's the last thing you want to do. So you want to try to be sure that this is close to the bottom, and then go in. And we're far from the bottom, far from the bottom. I will keep reporting and check in again. I'm Hans Lysklimt.